Hey, Bulls and Bears, let's talk about the ongoing financial crisis slash economic collapse and the continuing deterioration of our retail stores. And we're going to talk about more stores that are closing. And let's go ahead and get started right here. And this is out of ENAS, TJ Maxx, and Marshalls reporting store closures across the United States. And it's interesting when you look down the list here, a lot of these stores are located in areas that have been really hard hit. We see three of them in the Bronx right here. We see two more out of Brooklyn, a whole list of stores in the Chicago area. So at first you would think it would be smaller cities where incomes aren't as high, but no, it's the larger cities. And this is a reflection of the US economy, but it's also a reflection of the purchasing power of the US consumer. But we also see very high retail theft in these larger metropolitan areas than we see in smaller towns. It's happening everywhere, but it's largely concentrated in the larger metro areas. Also, we see many Burger King locations closing down, and it's estimated that it's going to be 400 locations that have closed by the end of the year 2023. Now, some people may try to argue or make the point that it's not a reflection on the economy, that it's more about the retail theft. Well, if it's just retail theft, how do you explain all the Burger King closures? Are people stealing Whoppers and fries from the kitchen? They're running back in the kitchen and stealing food and then running out. So this is definitely, I think, a snapshot of what's happening with the economy with all these restaurant and store closures both. But let's expand a little bit and talk about what's happening with other retailers. Let's go to Home Depot. Home Depot has seen a pretty big drop or decline in sales volume because of the higher mortgage rates and less houses, less home turnover in the real estate market. Of course, less people remodeling when that happens. What's happening with Home Depot? Well, Home Depot stock continues to get pounded. And let's take a look at a chart here on what's happening with Home Depot. And we're looking at a 5-year chart of Home Depot here. And if we look at the late 2021 price, December 2021, it closed the year out at $415 per share. Recently, it just hit $291.59, folks. So this stock is way off of the peak, and people invested in retail stocks now. I would just encourage you to do your research and be very, very careful with all the things happening, negatively happening in the economy right now, and ask yourself, is retail a safe place to be right now in the stock market? Now, this is not as noticeable if you just look at each index, like the S&P 500, the Dow Jones, the NASDAQ, because a lot of those are just propped up by a few of the mega companies. But if you look at all the companies, many of them are in the red year to date and year over year, which is definitely another bad sign for the economy. And it's a similar story for another home improvement giant, Lowe's. Let's take a look again, late 2021. And by the way, right here in this channel, we told you that that was going to be the peak, late 2021, early 2022. We saw the price back then was $261. It just recently closed at $194. And that's actually up from where it was in late October. It got down to about $183. So a lot of investors are underwater right now on these stocks. And that's not even the worst of it. Let's take a look at Target. Let's go ahead and enlarge this right now. And what do we see here? Again, late 2021, the stock got up to about $260 per share. And we see recently closed just over $108. A huge, huge loss for someone holding Target stock. And it could get much worse. Fed Chair Jerome Powell came out recently and said they haven't done enough to fight inflation. And he said, quote, they're not confident that the institution has done enough to bring inflation down. So could we see even higher rates going down the road here in the near future? And what's that going to do with all the consumers out there carrying such massive amounts of debt and record-setting amounts of debt, actually? Jerome Powell said him and his colleagues remain steadfast in getting policy in line with their 2% inflation goal, but, quote, we are not confident that we have achieved such a stance. unquote. And we have ongoing layoffs. Some recent companies here laying off people: Google, Amazon, Snap, Zillow. And these all just came out in the last 24 to 48 hours announcing fresh rounds of layoffs. And it's not just about individual stock. Let's take a look at a broad index. The Dow Jones, still way down from the peak. Late 2021, we were at 36,300. We recently closed at 34,283. So not a good time to be in the stock market unless you really know which stocks you are picking, and maybe you're bottom fishing in a stock that's had a big sell-off recently and it has nothing but upside to go. So a lot of investors and just the general population are choosing to put their money into fixed income assets, including money markets, where you can get 5% plus, and even CDs. Now, some of you may be thinking, oh, JJ, you're just cherry picking some bad stocks that you found. No, take a look at this. This is a retail ETF, and take a look at its performance here. This ETF recently closed just under $5.40. Folks, this was a peak of $51. Actually, it's even worse than that. The peak was about $53.69 in late 2021. So it's not just a few select stocks, it's the overall retail sector. But it's not all bad news. There is a few bright spots. Here's one. Let's take a look at Walmart. Let's go out to a 5-year chart here. Walmart actually is doing very nice here, closing just over $166. And Walmart is certainly bucking the trend as the stock recently hit an all-time high. So take a look at the Walmart chart and ask yourself, do you want to be in this stock? Is there more upside, or have we seen the peak in Walmart stock? Now, myself, I would feel more confident buying a stock that's already had a big drop and attempt to do a dip buy versus buying something that's at an all-time high. Please let me know what you think down that. Would you feel more confident investing in Walmart because the stock has performed so well? Or are we at, or maybe nearly approaching, are we near the peak of Walmart stock? And what would you rather buy? Maybe a Target that's down big year to date? Or would you buy Walmart? I'd like to hear from you down in comments on that one. Also, you have to look at dividends, because these stocks, some of them pay out dividends. Walmart happens to be paying out 1.37% dividend. To me, not enough of a dividend to make up for the fact that it's at a 52-week high. And yes, it could go higher, but to me, the risk is just too much, especially in the retail sector. And some of you might remember the report that I put out a few months ago, where I had spoken to a Walmart employee who was actually taking me back to get a product out of the locked encasing because of all the theft. On the way back to get the item that was locked up behind glass, he told me that his location lost $1.6 million in the 5-finger discount just this year, 2023. And we're not even to the end of the year yet. It's going to be much worse, I think, around the holidays, as people are even more financially strained, and as people are under more pressure to buy things as gifts. And a lot of people simply don't have the money or the credit now to make those purchases. So could we see things get a lot worse going into the end of the year for retail? I think so. I think my answer is yes to that. Again, what do you think down in comments? And also, we would ask the question here, is the U.S. consumer strong enough to prop up retail? Take a look at the savings rate here of U.S. consumers, and I think you'll see what I see. After an increase beginning in 2023, early in the year, we actually are dropping back down to a savings rate of about 3.4%. And this is how much the average consumer has left over after paying all their monthly expenses. And how's that going to bode for retail when you see this type of personal savings rate, how low it is? All right, folks, so information is power. I hope you use this information today to think about how you're investing. I continue to sit in cash for a money market return. I also continue to accumulate silver, which I think is very undervalued. And silver is ultimately going to be a really shocking investment to the upside here in the very near future, in my opinion. There's been a lot of manipulation with that silver price, and we'll talk about that more in a future episode. We'll get into that in more detail. But for now, I want to say, everybody, thanks for watching. Please give us a subscribe if you like what we talk about here, and a thumbs up would really help us get a little bit of traction for our views. I really appreciate it, everybody. Thank you for being here. We'll talk to you very soon now.